Well, hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're going to look at here is a chart of the market. This is the mini S&P 500 futures contract, front month in nature. Looking at the last print of 1267.25.50, we'll call it, on this Friday, the 7th day of January 2011. Welcome all you guys to a new year, brand new year of trading. And what's kind of interesting about today is we're getting some pretty good moves off the jobs report. We had a lower than expected drop in the unemployment rate, 10.4%, down from 10.8%. So actually, I guess one could argue that's a higher than expected decline in the unemployment rate, to be more accurate. But of course, the job creation just simply isn't there, and also the unemployment rate is factored on. Some of the people just stop looking for work, so they drop out of the labor pool or looking for work. So there you get a little bit of a decline. So the market isn't particularly impressed by today's number. And as you can see, we've got this beautiful low of level of support around 66 to 67 that we had yesterday and on Thursday. And really just acted as a foundation for all of yesterday's trade. And of course, we got down there again today on the errant move to the upside. Knee-jerk reaction actually was to the downside at 8:30 a.m. Eastern time. This, of course, starts RTH at 9:30 Eastern time, and so we actually did get a knee-jerk reaction to the downside. But the retail clients, I should say, purchased on the open, pros sold. It's a little bit of a snapback, pros selling again, but right here we are at support again. What's interesting about the market is it was actually bullish. If you look at our proprietary indicators here, you'll see that green means the bulls are in control, red means the bears are in control. Predominantly, for the most part, yesterday the bears were in control, as you can see right here. Bearish, 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 a lot of bears, but it was a bit of a mixed picture. As you see, some bullishness certainly here in the midday, bullishness throughout here on the session yesterday, and that's what you get, a kind of a quiet mixed session as we bounced from, we'll call it 75 down to almost 65. So a nice 10-point trading range, and that's certainly where we stand now. Having said that, we are at this midday, I should say, latter part of the early sessions, 11:15 Eastern time a.m., below the early session's low. So what's interesting is the bears actually could break below. What's more, you see a slide into the bearish column amidst all of our indicators. The trend is down. We're breaking below the low. So today's trade, for informational purposes, is certainly going to be a break below 66. Actually, we'll call it just a new low. 65.25 is going to hold for now, but anything below 65, go ahead and sell that puppy. Target 60. So it'll be a nice 5-point pop on the market, or stop it probably at around 68, we'll call it. So sell below 65, might get a pop to about 66, 67.50. If we get to 68, obviously the trade's null and void, but definitely want to target 60. If you're trading in fractions, obviously you want to scale out at 60, probably 57, and ultimately 55 to catch kind of a big winner on the day trade. So there you go. On the upside, it isn't looking particularly bullish, so we're not going to have any kind of long setup, but for informational purposes, the trade is short below 65, and actually, in all actuality, right around 68 to 69 is a great scaling in opportunity. So if we get a little bounce there, go ahead and jump in a little bit on your exposure, and go ahead and target a move probably down to around 62.50 on that position. And of course, the aforementioned trade remains out there, because as you can see, the bears are certainly in control today. So we're going to switch over. That's a quick look at the intraday analyses. And look at this beautiful, we just had another beautiful trade. That's a bit of a loser there, but three beautiful long setups right here on the spiders. And if you look at the performance report, look at that, a beautiful 80. Had a little bit of a hiccup there, but look at that, a beautiful $83,000 in profit. Of course, you need $21,000. So if you look at the performance of this portfolio, you can see $84,000, $21,000. Of course, you'll need to trade. This is factoring in $7 up to $15 a round turn for slippage and commissions. $328 has been the average trade net profit. So just a beautiful system. And of course, booking another long setup. If you buy 1,000 shares, and of course that's 1,000 shares, so this is a $100,000 account just to trade essentially. Obviously, you can get away with margin probably around $60,000 if you're trading on margin. We don't recommend that certainly, but nevertheless, you can see $100,000 account, $20,000 drawdown, 20%. That's not too bad when you can make $325 per system, per trade, I should say. Another beautiful swing system, Swing System 5.0. Let's see how this one's been doing. I don't think that's it. There we go. Again, another bit of a hiccup there, but a beautiful $16,000 in profit over the last year and a half or so. And as you can see, right back into a short position after booking a couple of winners and one of those being scratched. But actually what we're looking for is a daily chart. We'll just keep looking at these swings. Here's our MRS trading model. As you can see, booked a beautiful gain. 844.30 all the way up to 910. So 60 plus points, $6,000 per contract. But you can see a little bit of that profit was eaten away, but we also have the winners. So cancel those out, $6,000 in profit per contract. That's about 120% gain or so, but we are really running out of time. Good gosh. Look at that. Beautiful. Actually, we also have, I guess that's going out of range, we also have the, look at that beautiful $70,000. This is, of course, after slippages and commissions. MRSTF, $20,000, almost straight up. MRSYM, $50,000, and we'll go ahead and minimize those. That one's short. MRSTF is flat. MRSEM is short. So interesting there, but we are really running out of time as the market's breaking lower. Again, we've mentioned the bearish side. Beautiful $600 win the other day on the Evo, and I don't know where that went. But anyway, we're going to have to take a quick look. Sorry, a blank screen. Well, that's very nice. So here's how we've been doing over the last 30 days or so. The outstanding performer has been the Master on the website Master A. The Master's gained 70%, handily outperforming all of our other trading models. And, we actually should mention at least the daily analysis. I don't know how we missed that. We are still, the bulls reign supreme. Well, I guess it's just not going to come up. The bulls reign supreme, but our RMT is still in a bearish position. Going to add some more bearish exposure here and stop it out if not. But all the signs continue to point to the bulls being in total control of the market. So continue to buy any dips would be the actual advice on that, as you can see. But they're over the last 30 days. So you can go to the website, take a look at these portfolios. Here's the QTrader, #1 rated on SE's website. You can take a look at those performances. This is the real-time tracking. This is these are our performance numbers right here after commission and slippage has been deducted. And for the portfolio, you can see up. It's got a pretty nasty drawdown, almost 100%. But this isn't your father's futures trading. This is this isn't your father's AT&T stock holding. This is futures trading. This is 10 to 20% of your total portfolio. This is risk speculation, and as you can see right there, beautiful profits have been for the Master, or that's actually the QTrader. There you go. I was wondering about that. You can actually go and look at the Master A as well, and $62,000 in profit after slippage and commission. Again, 100% drawdown, but we recommend 10 to 20% of your portfolio. There you have beautiful trades. Anyway, we are out of time, so we will see you next time. Hope you guys enjoyed the video, and we're going to go ahead and stop everything right now.